Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report that might sound like a snooze fest, but trust me, it has some interesting secrets about how a big real estate company is raising money. It's like finding out how the magician really pulls that rabbit out of the hat. We're going to look at Blackstone Real Estate Income Trust's latest filing. This report is called an 8K, and it's basically a quick update companies give to the Securities and Exchange Commission, or SEC, about important events. In this case, it's about selling shares, which is like slices of the company to raise money. The date of the report is April 11, 2025, so this is pretty fresh information. The key part here is about unregistered sales of equity securities. Think of equity securities as ownership in the company, and unregistered means they didn't go through all the usual paperwork with the SEC before selling these shares. This doesn't automatically mean something shady is going on, but it does mean they used a shortcut allowed under certain rules. They sold what's called Class C common stock. Different classes of stock can have different voting rights or other special features. In this case, it seems like these shares were sold to a special type of investment fund, sometimes called a feeder vehicle. This fund is designed to attract money from investors outside the United States. So Blackstone is tapping into the international market for funds. Now, let's get to the numbers. On March 13, 2025, they sold 19,719 shares. Then on April 11, 2025, they sold a much larger chunk, 157,950 shares. The table is the most important part because that's where the money is. The first sale in March brought in about $300,000. The bigger sale in April generated over $2.4 million. All told, that is $2.7 million. These sales were made without registering them with the SEC because the company claims it was allowed under Section 4AEA2 and Regulation S of the Securities Act of 1933. Basically, these are exceptions to the rule that say if you're selling to a limited number of sophisticated investors or to people outside the US, you don't always have to go through the full registration process. The report was signed by Leon Voltiok, who is the Chief Legal Officer and Secretary of Blackstone Real Estate Income Trust. So what does all this mean? Well, Blackstone is actively raising capital, and they're doing it by selling shares to a special fund that targets international investors. They're using legal loopholes, or more politely, exemptions, to avoid some of the usual regulatory hurdles. Looking at the bigger picture, this could be a sign that Blackstone sees opportunities for investment and growth. They need capital to make those investments, and they're finding it by tapping into overseas money. But it also means they're relying on specific types of investors and legal maneuvers. This isn't necessarily bad, but it's something to keep an eye on. One thing that stands out is the large jump in the number of shares sold between March and April. It might indicate a growing demand from international investors or a change in Blackstone's fundraising strategy. We also don't know exactly what Blackstone plans to do with this $277 million. Will they use it to buy new properties, renovate existing ones, or pay down debt? The answer to that question would give us a clearer picture of their long-term goals. There are a few potential risks here. First, relying too heavily on unregistered sales could raise eyebrows from regulators down the road. Second, international investors can be fickle. If global economic conditions change, or if Blackstone's performance dips, those investors could pull their money out, leaving Blackstone in a tough spot. In conclusion, this 8K report tells the story of a company actively seeking capital from international markets using specific legal exemptions to make it happen. It's a strategy that could pay off big if things go well, but it also carries some risks. Keep an eye on how Blackstone uses this money and how their international investor base reacts to their performance. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe for more corporate deep dives. Until next time, stay curious.